Good morning.
Okay. Good morning. Good morning, unit holders and members. Thank you for joining in. Thank you for your patience and apologies for the delay. We're supposed to start at 8. It is now 8:13, but we will go ahead. So welcome everybody to the Ilam Fahari I-Reit investor briefing. It is 30th March, 26 degrees, and it is partly cloudy in Nairobi. We are live on Zoom and live on YouTube as well on our channel, and we will go ahead with our program. Allow me to start with a word of prayer. Let us believe and pray. Our Father in heaven, we thank you for this wonderful day you've given us. Pray that you bless this session, that you will guide us in our deliberations, and that all will be well, all to the glory of your name. For it's in Jesus' name we pray. Amen. I hope you've been able to say amen on your side, and I can be heard clearly. I'd like to start with some words of wisdom. So real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid in full, and managed with reasonable care, it is about the safest investment in the world. And these are the words of Franklin D. Roosevelt, who was a US president. So as we continue today, I'd just like to give some housekeeping as we continue with the session. So one, our audience will be muted, just so that you can be able to all hear clearly and pay attention to the speakers for the day. We encourage you to seek clarifications and any additional information you may have, and use the Q&A portal or the Q&A session that we have in the Zoom platform. So kindly use it. Feel free to type your questions during the presentation. We have a team on the back end who is available to respond to the queries that you have, or even the comments that you have, so that we can also save on time and be efficient, and questions could be answered as we go on. We will have the presentations available on our website, and you can look forward to that. So the members, as we continue, it's good to note that we have been operating in uncertain and volatile times, and we do look forward to the light at the end of the tunnel. So I would like to take this time to invite our CEO, Einstein Kihanda, who will give the presentation for the day. Over to you, Einstein.
Thank you very much, Modoni. It's an honor and privilege to our esteemed investors this morning to talk to you about the Ilam Fahari I-Reit performance for the year ended 31st December 2021. I'll start by taking you through the current structure of the Ilam Fahari I-Reit. So I'll start by taking you the current structure of the Ilam Fahari I-Reit in order to give you a perspective so that you are able to understand how we function and how we operate, because it will also have help you understand our performance. So at the very apex of the structure, we have the trustee, the current trustee. The trustee is a cooperative bank and have been since the REIT was listed back in December 2015. We are the REIT manager, and there is a reporting line to the CMA and the NSE by virtue of the fact that we are listed. We have service providers for the REIT. We have property managers, valuers, structural engineers, legal advisors, tax advisors, and the auditors. We also have investors who are the unit holders on whose behalf we manage these assets. And we have both institutional and retail investors. Now, when we come to the portfolio, and I'll be talking a bit more about the portfolio itself, we've got the real estate investments and we've got cash and cash equivalents. And this we have for purposes of liquidity. We currently have 4 properties in the portfolio: GREENSPAN Mall Limited, Bay Holdings Limited, Signature International Limited, and Sterling Park properties. And these are the special purpose vehicles through whom these properties are held. I'll now take you through the operating environment that was prevailing in 2021 in order for you to be able to understand the performance of the REIT in 2021. At a macro level, key variables that we look at and that are directly relevant to our industry, cement production and consumption. And you'll see from the chart that we actually saw an increase in cement production and consumption all the way back from January 2020 and reached a peak in October 2021 before we saw a slight drop up to December 2021. When you look at the value of approved building plans within Nairobi County, which is where all the properties that we hold are domiciled, we actually saw a decline in residential property approvals towards the end of the year. However, for non-residential, we actually saw an increase. But obviously, it has been, you can see from the graph that it's been fairly volatile. Headline and core inflation, again, has also been on an increase. And we expect that as we move on in the year, in view of all the developments that have taken place on the global environment, we'll actually have an increase in terms of overall inflation. But from what we understand from the Central Bank of Kenya, this is within the band in terms of overall inflation. Now, when you look at the credit growth trends in Kenya, overall private sector credit growth has been generally on an upward increase, especially towards the end of the year. However, to the building and construction sector, which is and real estate, we've actually seen a decline, and that has had an impact in terms of the overall performance of the property sector. How about the retail sector? The pandemic and the economic downturn has continued to negatively affect the retail sector. However, we have noticed on a positive note that footfall across the retail centers has been on the rise since the second half of 2021. It largely remains a tenant market in view of the challenges that we have seen that have faced the retail sector over the last several years, with large supermarket chains experiencing significant challenges, and that has therefore affected the performance of the property owners in which these malls, these stores are located. I think in terms of the expansion of the retail sector, we have seen significant levels of activity in terms of expansion of the supermarket chains across the country. Largest of this is Naivas, which has 78 branches and which opened 5 outlets in 2021. And in 2022, and I'll be talking a bit about that, opened their outlet at GREENSPAN Mall in February of 2022. We've also seen Chandarana Food Plus open, which has 23 branches, opening a total of 3 branches in 2021. Quickmart opened 6 branches last year, and Carrefour opened 5 branches in 2021. So overall, you can see that in 2021, there was a lot of activity across the retail sector as various supermarket chains expanded their presence in the country. In the office sector, again, we are players in this sector. We've actually seen the current economic slowdown and continued oversupply of commercial space in major office nodes, leading to a decline in rental levels. There were a total of more than 1 million square feet delivered in 2021. And the biggest of which was the Global Trade Center, which is actually just across our offices, which has approximately 625,000 square feet. So that is significant office space. The activity in terms of occupiers of these properties is increasingly fueled by an improving economic outlook. And we expect headline rents to remain subdued for the remainder of 2022. And the graph highlights the trends that we have seen as presented to us by Knight Frank. Let's also look at the industrial sector. Again, we are also players in that space. And we are actually seeing an increasing emergence of modern logistic parks. And this is largely attributed to e-commerce, inter-regional trade growth across various sectors. And because of this trend in terms of activity, there is significant increase in warehousing demand. And here we're talking about e-commerce infrastructure development and governance. All these are contributing to the demand for warehousing. And so this is an increasing and a major development that we're seeing. And we expect that we will have an upward trajectory in this particular sector. So let's move on now to our current portfolio, which the REIT owns. And I'll give you a brief overview of the state of these properties. The largest asset in our property portfolio is Greenspan Mall. This is a retail center located on Savara Road in Donholm. And in terms of its general description, it's a modern shopping mall in a middle income area in Donholm, which is about 15 kilometers from the city center. In terms of the leases on this property, the average escalation rates are at about 7.5% per annum. And the lettable space is 155,477 square feet with a current occupancy of 86%. We have 67 Gitanga Road, which is a grade A low-rise office located on Gitanga Road, Lavington. It's a modern, high-quality office accommodation, and it's actually designed to international standards and offers the single tenant currently a secure, highly efficient, and flexible working environment. The escalation rates are 15% biannually, and the lettable space is 41,312 square feet, 97 parking bays, and has an occupancy of 100%. We have two small properties in industrial area, that is Bay Holdings and Signature, both of which are commercial. Bay Holdings is located on Bamburi Road in terms of industrial area. It's an office come light industrial property located along a main road within the main industrial area. The escalation rates on rent for this property is 12.5% every 2 years. The lettable space is 33,265 square feet and currently and has an occupancy of 100%. The other property is located on Pokomo Road industrial area, light industrial property with 3-story offices and currently vacant, and has 7,638 square feet of space. So I will now go into the financial performance of the REIT for the year ended 31st December 2021 by giving in terms of the key highlights. We had a decline in net earnings, 100% decline in net earnings, and I'll be explaining why that has happened. We also saw a 6% decline in investment property. Management expense ratio remained at about 3%, and the net asset value of the property per unit on the portfolio was 19.58 shillings per unit. Despite that performance, we will be distributing Kenya shillings 50 cents per unit. So just to take you through the highlights of the financial performance in 2021, I'll start by looking at the overall rental and related income. We had an 18% decline in terms of the overall rental income. And this is attributable to the fact that we had 7 months of loss in terms of income from the anchor tenant. As you may be aware, the anchor tenant at Greenspan Mall up until December 2020 was Tuskys, which experienced financial challenges and whom we eventually distressed and vacated the premises on in December 2020. We then embarked on a process of engaging prospective supermarket chains to take up the anchor tenant space, and we eventually settled on Naivas, who then we started earning rent on the property in August of 2021. So for a period of about 7 months, we did not earn any income as a result of the fact that it took quite a bit of time for the setting up of the space. And therefore, we have seen that effect on the income in terms of rental income for 2021. In addition to that, the new anchor tenant also took up less space than Tuskys did. And this was a strategic, for strategic reasons. The REIT manager felt that it was important to reduce our concentration risk, and therefore We also have less space being occupied by the anchor tenant. However, we expect that this will have a positive impact once the space is leased and will be able to reduce the concentration risk. The other highlight I would like to mention is with regards to the fact that we also had higher provisions for irrecoverable withholding tax, which is actually a tax leakage due to the fact that we were yet to get the tax exemption certificates on the properties, and therefore we had tenants withholding tax. However, the good news is that in 2022, we have been able to get the tax exemption certificates for the 3 properties that are occupied, and therefore going forward, we do not expect that this will have an impact in terms of revenue leakage. The other aspect I should also mention in terms of the fair value adjustment in terms of investment property, you will see that in 2020 we had an increase, however, of 13.6, but in 2021 we actually had a drop by 225 million. And that is actually the impact both of COVID in terms of property values across the property asset class in the country, and also the impact of the vacancies at Greenspan Mall. And as a result of that, we saw a devaluation in terms of the property assets. Overall, therefore, the distributable earnings are reduced by 24% to 102 million shillings. And as a result of the factors that I have mentioned, that had an impact on the loss of revenue. That is the statement in terms of the balance sheet of the REIT as at the end of 31st December 2021. And you will see that we had a drop in terms of the fair value of the property from 3.385 to 3.19. And therefore, overall, we had a decline for the reasons that I have mentioned. That is the cash flow movement in terms of activity on the REIT for 2021. I have already mentioned the fact that in my description of the properties, and this is just a summary of the properties and the vacancy levels as at 31st December 2021. And you will see in terms of Greenspan Mall and the other properties. We are working very hard in terms of ensuring that we're able to increase the occupancy levels in these properties. And we, working with the property manager, have embarked on a very aggressive marketing plan in terms of being able to market this space. And especially with regard to Greenspan Mall, the fact that we now have an active anchor tenant has also given us confidence that we'll be able to see increased footfall in the mall, and will also enable us to have, therefore, secure various tenants in terms of being able to ensure that the building is fully occupied. In terms of looking ahead, the areas that we are looking at in terms of the REIT, number one is growing the portfolio. We will be looking at how we can expand the asset base in terms of the portfolio, and we'll be sharing a lot more of this information at the appropriate time with regards to how we are embarking on growing the portfolio. We are also working on optimizing the existing portfolio. And right now we are engaged in a lot of significant capital works at Greenspan Mall in terms of improving the property and therefore ensuring that we are able to deliver value to our tenants and ultimately to the unit holders. The issue of sustainability remains a very relevant issue globally, and that does not leave out the property space. And working with various stakeholders, we're also working on ensuring that we are active participants in the sustainability agenda with regards to the state of our properties. And finally, we are also looking at focusing on strengthening our investor and stakeholder relations. And we will be keeping you engaged and updated about what we are doing in terms of the activities of the REIT with a view to ensuring that we are providing with up-to-date information as investors and stakeholders. So that, in a summary, is an overview of the performance of the REIT for the financial year ended 31st December 2021. And I will therefore be glad to take and answer any questions that you may have. Thank you very much.
Okay, thank you very much, Einstein, for that comprehensive coverage of the economic overview as well as the performance of the REIT. I'll read out one of the questions we have on the Q&A. I encourage all of you to put in your questions in the Q&A platform. So this is from Kefa Mwerore. He asks, last week, the REIT manager put out a notice on a potential restructure of the unit trusts. Could you provide more details on this? Members in attendance, kindly give us time to just sort out the sound. We'll be responding to that soon. Keep your questions coming in. It will be easier and faster if you can put them in the Q&A board so that even as we are sorting out the sound, an answer can be typed out for you. Thank you.
For that question. As we have highlighted in our questionnaire announcement, we have embarked on a process of reviewing the REIT with a view to ensuring that we are able to address the optimal performance of the REIT going forward. And as a result of that, there are certain approvals that will be required and which we have therefore embarked on securing. And once this information and once these approvals have been secured, we'll be able to share with you the outcome. And as we have indicated, we'll provide you with all the information shortly. And that explains the reason why we had to provide you with that cautionary announcement.
Thank you, Einstein, for that response. I think I'll read out the next question. This is from Julian Amboko from NTV. So he says, is there a plan around offloading higher yielding properties in view of the subdued performance? And the second question is, has ILAM considered seeking any concessions from the market regulator regarding the prescribed 80% earnings payout? The entity really needs capital preservation. I think, let me read it out loud again. Or Einstein, you've been able to hear?
I think with regard to the first question, with regard to the properties, ultimately, these are decisions that are require approval. Of course, we have an overall view in terms of where we want to be in terms of the performance of the properties, and have reviewed the performance of each. And we have therefore keen on ensuring that we're able to ensure that these properties deliver as expected. And what I would say is that for us, it's important to ensure that we are able to secure the necessary approvals to do so. And therefore, from an overall perspective, those are areas that we are keenly looking at. And I believe at the right time, we'll be able to share with you the information. With regard to the distribution, I think it is in the interest of our unit holders to ensure that we're able to deliver returns to them as expected. And we are therefore satisfied that even with the challenges that we have seen in 2021, that we are still able to deliver and distribute earnings to our unit holders. We believe that is important, and because it is an expectation that they have and that have invested. And as the REIT manager, we are doing our best to ensure that we're able to deliver on that.
Sorry, I just realized that I was speaking on mute. Apologies for that. So I will go to the questions on the Q&A board. Anthony Musioka asks, Signature Holdings has been vacant for more than 3 years. What is the way forward? Oh, sorry, he says.
For that question.
Sorry, Highway
Yes,
House.
in terms of, yes, it has been vacant,
House.
And we have been working with the property manager in terms of securing the tenants and also looking at how we can be able to review from a strategic perspective in terms of the property. Again, on that, we'll also be able to share with you a lot more details with regard to the way forward on that particular property. But I think in terms of the, I think on the way forward, again, we'll be sharing a lot more information with you in terms of what we see in terms of the actual action we will take on that particular property. But we hear your concern, and it is one of the strategic issues that we are addressing.
Okay, thank you for that. Trying to look through the Q&A. We're done with the questions in the Q&A. Let me look at the chat, see if we have any more questions over there. Give me a few seconds. Vigilance, you have been sorted. Okay. Right, so we have one from Patrick Alushula. Kindly clarify how much you'd booked as provisioning for the irrecoverable tax and how much you've received in 2022. So I repeat the question, kindly clarify how much you've booked as provisioning for the irrecoverable tax and how much you've received for 2022.
Thank you. The answer to that is 22.8 million Kenya shillings. That was a provision.
All right. Hope you've been answered there, Patrick. 22.8 million Kenyan shillings. I don't see any other question on the chat, nor the Q&A session. So I think I can give it a minute for anyone who may think up some questions, and then we can move towards closing the session. A few more seconds. Okay, so I think I can guide. Oh, all right, one final question from Julian's. One, it says, how much does Tuskies owe and what are the plans? How much does Tuskies owe and what are the plans? I hope we'll be able to answer in detail those questions, but I'll give that to Einstein, if that is a response we can give out to the public.
Thank you for that. Oh, sorry, let me just... The amount Tuskies owes is 26 million Kenya shillings, which has already been provided for, but of course we are pursuing that legally through the court process.
Okay, quick and straightforward response to that. I'm happy you could get the specific answer to your question. I think we are done with the questions. Members of press, in particular, if you have any more questions that come up, you can direct that to Nkatha Gitonga. I'm sure you have her contact details. You can send them on email, and she will forward that to the ILAM-TIR team, and they'll be able to respond to you. And then I would like to just take this session.
Mudani, there is one more question.
Yes, sorry, I've seen one more. Okay. All right. So I think sharing a bit of an echo, but in the interest of time, I just want to take this opportunity to thank members of press, to thank the investors, to thank even the members of staff at ILAM-TIR, the head, CEO, as well as the analysts and everyone else in that department, and even our independent analysts. We want to thank you. And ultimately, we also want to thank God for this session that has been successful. I'll reiterate, if you have any more queries, clarifications, or any comments that you want to give, you can channel back to Mikasa, and she'll be able to get to the team, and we'll be able to respond. So thank you. With that, I think we'll close the session, and have a lovely day. And we look forward to the light at the end of the tunnel. Have a good one. Bye.
Thank you.